What's up everybody, it's Jake and welcome back to the channel. Today we're tackling a topic every freelancer dreads but can't afford to ignore: taxes. Understanding how taxes work is the difference between keeping your hard-earned money and handing over a huge chunk to the IRS. With big changes coming in 2025, being unprepared could spell disaster. In this video, I'll break down the top 3 tax mistakes freelancers make: not saving for taxes, skipping quarterly payments, and missing out on deductions. Stick around. Getting this right could save you thousands and a ton of stress. Let's jump in. Mistake number 1. And it's a big one that trips up countless freelancers. It's the simple yet devastating act of not setting aside money for taxes. It sounds obvious, almost insultingly so, but so many freelancers fall into this trap year after year. They underestimate the impact or simply forget amidst the hustle. When you're self-employed, running your own show, every payment lands in your account with no taxes withheld. Unlike a traditional job, there's no employer automatically deducting taxes. It's tempting to treat it all as spending money, a reward for your hard work and dedication. You see that number in your bank account and think of all the possibilities. But here's the harsh reality. A big chunk, a significant portion, belongs to the IRS. It's not truly yours to spend freely. If you don't save as you go, diligently putting money aside with each payment, tax season can hit you with a massive bill, a financial tsunami, that you're simply not ready for. It can feel like a punch to the gut. That's when people panic. The realization sets in, and the scramble begins. They start draining savings, depleting their emergency funds that were meant for unforeseen circumstances, selling investments, often at a loss, just to scrape together enough to pay the tax man, or even going into debt, racking up high interest charges just to pay taxes. It's a vicious cycle. All of this is completely avoidable: unnecessary stress and financial strain, with a simple, proactive system. Here's what you do: a straightforward strategy to protect yourself. Every time you get paid, no exceptions, immediately transfer 25–30% of that income before you even think about spending it into a separate savings account, a dedicated pot of money just for taxes. Label it clearly so you don't forget its purpose. This isn't your emergency fund for unexpected bills or your vacation money for that dream getaway. It's your tax fund. Don't touch it, no matter how tempting. Why 25–30%? What's the magic behind that number? That range generally covers federal, state, and self-employment taxes, including Social Security and Medicare contributions. It's a safe buffer. For example, let's say you get a payment of $5,000 for a project. Immediately move $1,500, that's 30%, to your dedicated tax account right away. Treat it like a bill you have to pay. The remaining $3,500 is what you can actually use for business expenses, personal living costs, and everything else. Do this consistently with every payment, whether it's big or small, and you'll always have enough set aside when taxes are due. No more surprises. Remember, oversaving is always better than undersaving when it comes to taxes. It's better to be prepared than scrambling at the last minute. If you end up with extra money in your tax account after filing, consider it a bonus, a reward for your diligence. Undersaving, on the other hand, inevitably leads to penalties, interest charges, and a whole lot of unnecessary stress and sleepless nights. Remember that tax money was never really yours to begin with. It's just temporarily passing through your hands on its way to the government. By moving it out of sight into a separate, untouchable account, you effectively remove the temptation to spend it on something else. This simple habit, this consistent practice, is the very foundation of financial stability and peace of mind for freelancers. Open a dedicated tax savings account today, if you don't already have one, and consider setting up automatic transfers to make the process even easier. Don't risk facing penalties, interest, or accumulating debt. Set up your tax savings system now and protect your financial future. Make saving for taxes a non-negotiable part of your freelance workflow, as essential as invoicing or project management. Your future self will thank you profusely. That's mistake number 1, a common pitfall, but easily avoidable. Let's fix it for good and move on to the next. Alright, let's dive into mistake number 2 that many freelancers often overlook. This one can really sting if you're not careful. It's all about ignoring those quarterly estimated tax payments. Now, saving for taxes is absolutely a great habit to get into. It shows responsibility and foresight. But here's the catch. The IRS wants their money in installments throughout the year, not just in one lump sum when April rolls around. They operate on a pay-as-you-go system. As a freelancer, because you're self-employed, you're required to pay estimated taxes 4 times a year to cover your income tax and self-employment tax. The first deadline hits in April, typically around the 15th. Then comes June, usually the 15th as well. Following that you have September again around the 15th, and finally January of the following year. If you miss these deadlines even by a day, you'll unfortunately face penalties from the IRS. This is the case even if you diligently pay your full tax bill by April of the following year. The IRS doesn't just impose penalties, they also charge interest on the amount you should have paid each quarter, as if you were borrowing from them. So don't let your hard-earned tax savings just sit there idly in a bank account. Make sure to send in those estimated tax payments on time, every quarter. Now the big question, how much should you actually pay each quarter? Well, the safe harbor rule, as it's known, says you should pay at least 90% of what you estimate your tax liability will be for this current year. Alternatively, you can pay 100% of what you owed in taxes last year. Then simply divide that total amount by 4 to determine your estimated quarterly payment. If your income is relatively steady and predictable from month to month, then using last year's tax bill as a guide is generally a safe and reliable approach. However, if your income tends to fluctuate quite a bit throughout the year, which is common for many freelancers, it's best practice to carefully calculate your profit for each individual quarter. Then, base your estimated tax payment on that specific quarterly income. To make this process easier, consider using accounting software to meticulously track your income and expenses. This will not only help you estimate your payments accurately, but also simplify your overall tax preparation. When it comes to actually paying your estimated taxes, the process is quite simple and straightforward. You can conveniently use IRS Direct Pay, which allows you to pay directly from your bank account. Another option is EFTPS, the Electronic Federal Tax Payment System. Or, if you prefer a more traditional method, you can always mail a check along with Form 1040 ES. And lastly, don't forget about your state taxes. The majority of states also have their own set of quarterly deadlines for estimated tax payments. So, take a moment right now to put all 4 federal deadlines as well as your state's deadlines directly into your calendar. Make paying your quarterly estimated taxes a consistent part of your routine, treating it just like any other essential bill, such as paying your rent or utilities. Staying on top of your quarterly payments will not only help you avoid those dreaded penalties, but also contribute significantly to the overall financial health and stability of your freelance business. Furthermore, making these payments forces you to regularly check in on your finances and assess your business's performance, ultimately making you a more informed, proactive, and successful business owner. So, don't be a tax hoarder, accumulating all your tax obligations until the very end. Embrace the pay-as-you-go system. Save diligently, calculate accurately, and pay your estimated taxes on time, every single time. That's how you successfully avoid the second biggest tax mistake that freelancers often make. Now, with that covered, let's move on to the third common tax mistake. Mistake number 3, missing out on deductions. This is a big one, and it's where many freelancers unintentionally leave money on the table. It's easy to overlook expenses, especially when you're juggling multiple projects and wearing many hats. But neglecting your deductions can significantly impact your tax bill. Every dollar you deduct is a dollar you don't pay tax on. Think of it as finding hidden discounts on your tax bill. The more you deduct, the lower your taxable income becomes and the less you owe to the government. This is where you can really save. By diligently tracking and claiming all eligible deductions, you can free up cash flow for reinvesting in your business, paying down debt, or simply enjoying the fruits of your labor. As a freelancer, you're a business, operating independently and responsible for managing all aspects of your work, including finances and taxes. And businesses get to deduct ordinary and necessary expenses. These are costs that are common and helpful for your type of business. Don't leave money on the table by failing to track your expenses. It's like throwing away free money. Develop a system for recording every business-related expense, no matter how small it may seem. Common deductions include, but are not limited to, a wide range of categories that can significantly reduce your tax burden. Home office. If you work from home, even part-time, you may be able to deduct a portion of your housing expenses. Deduct a portion of your rent, mortgage interest, utilities, and internet. This can add up to substantial savings over the course of a year. If you have a dedicated workspace, meaning a space used exclusively for your business, use the simplified method, $5 per square foot up to 300 square feet, which is a straightforward way to calculate your deduction. Or the regular method for a bigger deduction, which involves calculating the actual expenses related to your home office. Business supplies. These are the everyday items you need to run your business. Pens, notebooks, software, stock photos, and more. Don't underestimate how quickly these costs can accumulate. Equipment. These are the larger purchases you make to support your business operations. Laptops, cameras, microphones, desks, anything you need to perform your work, often fully deductible in the year you buy them, thanks to depreciation rules in Section 179 of the IRS tax code. Phone and internet essential tools for communication and accessing online resources. Deduct the business use percentage of your bills. If you use your phone and internet for both personal and business purposes, calculate the portion used for business. Travel. If you travel for business, you can deduct many of the associated costs. Client meetings, conferences, workshops. These are all opportunities to network, learn, and grow your business. Deduct airfare, hotels, and 50% of meals. Keep detailed records of your travel expenses, including receipts and itineraries. Education investing in your skills and knowledge is crucial for staying competitive. Courses, books, memberships that improve your business skills are deductible, as long as they maintain or improve skills you need for your current work. Health insurance, a vital expense, especially for freelancers who don't have employer-sponsored coverage. If you're self-employed, deduct premiums for yourself and your family. This can be a significant deduction that helps offset the cost of healthcare. Retirement savings. Planning for the future is essential, and the government offers tax incentives to encourage saving. Contributions to a SEP IRA or solo 401k are deductible and help you build wealth. It's a win-win situation. The key is tracking. Without accurate records, you won't be able to claim the deductions you're entitled to. Use a dedicated business bank account and credit card. This simplifies tracking and helps you separate your business finances from your personal finances for all business expenses. This makes it much easier to categorize and track your spending. Keep receipts and use apps or accounting software. There are many tools available to help you streamline your expense tracking, to log everything. The more detailed your records, the better prepared you'll be at tax time. Don't guess at the end of the year. The IRS wants proof. They may ask for documentation to support your deductions, so it's crucial to keep accurate records. Every missed deduction means you're paying more tax than you should. It's essentially giving the government a free loan. If your marginal tax rate is over 40%, missing $5,000 in deductions costs you $2,000. That's a significant amount of money that could be used to grow your business or achieve your financial goals. Open a business account, use software, and get obsessed with tracking. Make it a priority to stay on top of your finances and maximize your deductions. Learn the common deductions for your industry. Different industries have different expenses, so it's important to understand what's deductible for your specific line of work. Maximizing deductions isn't cheating, it's smart business. It's about taking advantage of the tax laws to reduce your tax liability and keep more of your hard-earned money. Don't overpay the IRS. By being proactive and informed, you can ensure that you're only paying what you legally owe. Make tracking expenses a habit, and you'll keep more of what you earn. It's a simple yet powerful way to improve your financial health and achieve your business goals. That's mistake number 3. Let's wrap up. We've covered a lot of ground, so let's recap the key takeaways. There you have it. The 3 biggest tax mistakes freelancers make and how to avoid them. Set aside money from every payment, pay your quarterly taxes on time, and track every deduction. Build good habits and systems, and tax season becomes just another business task. If you found this helpful, hit like and subscribe for more freelance finance tips. Share your tax tips or lessons in the comments below. Remember, I'm not a CPA. Always consult a tax professional for advice tailored to you. Thanks for watching, and I'll see you in the next video.